Good morning, students. Welcome you all once again in the live virtual revisionary class organized by Board of Studies of ICAI. Students, today we are going to talk about Ind AS 105, and I would say we'll revise Ind AS 105 today with the questions given by the Board of Studies of ICAI, some complex questions, right? So first of all, let me set the context of Ind AS 105 for next 5 to 10 minutes, and then I'll move to the complex questions on this word file. Students, if I talk about the standard non-current assets held for sale and discontinued operations, so this standard talks about two things. Number one, it talks about non-current assets held for sale, right? Non-current asset which are held for sale. And it also talks about discontinued operations. Okay. So when I'm talking about non-current assets held for sale, so this standard talks about two things. Number one, individual asset held for sale and group of assets held for sale. When there is an individual asset which is held for sale, for example, a company wants to sell a building. Okay. So in that case, that building is the non-current asset. It is held for sale. So this individual asset held for sale is known as non-current asset held for sale. Second example, for example, a company wants to sell a factory. Okay. If a company wants to sell a factory, so in that case, in factory, there are group of assets. There are machinery, raw material, finished goods, right? There are computer, hardware, software. Okay. So there are office equipment, furniture and fixtures. So there are a lot of group of assets in that factory. So that group of assets is known as, when this factory becomes held for sale, it becomes a group of asset held for sale, and it is known as a disposal group held for sale. So in non-current asset held for sale, two aspects are there. Non-current asset held for sale means individual asset held for sale as well as group of asset held for sale. And the name is, what is the name? For individual asset, it is non-current asset held for sale. For group of asset, it is disposal group held for sale, right? So the accounting treatment are same for individual asset held for sale as well as group of asset held for sale. Okay. And what is discontinued operations? Discontinued operations means the operations which are discontinued by a company. For example, a company is manufacturing a particular product in its factory located in Delhi. And there are two factories located in Delhi. There are two factories located in Delhi. And the company has sold, the company has disposed of one of the factory in Delhi. And in the second factory, the production of that product, that particular product is going on. So in this case, there is neither a discontinuation of a geographical area of operations. The other factory in Delhi is there, right? There is neither a discontinuation of a product, right? Because this product is getting manufactured in other factory. So in this case, when two of the factories are there, for example, and one of the factories sold, it is only disposal group held for sale. It is not a discontinued operations. But even though, but even though both the factories are there, but the company has decided to discontinue one of the major product, one of the major segment, right? So no any factory has been disposed of, but the company has decided to discontinue one of the major product, right? And that major product line is like a segment. So in that case, it is a discontinued operations. Second example, the company has decided to dispose of both the factories and the company has decided to move out from Delhi. So in this case, it is a disposal group held for sale as well as it is discontinued operations. Okay, right? So friends, this was the context. Now, moving further, when a non-current asset held for sale, when a individual asset or group of asset held for sale is considered as held for sale in this particular standard. I mean to say, what is the recognition criteria in this particular standard? For example, a building. when a building is a non-current asset. When a building will move to current asset, a building will be moved to current asset when it is classified as held for sale. So the question comes, when a non-current asset and disposal group will be classified as held for sale. So there are friends recognition criteria which says that, Saminathan, what is the criteria when a non-current asset or disposal group will be classified as held for sale?
Yeah, good morning, sir.
Good
Eh,
morning.
Yeah, it's a immediate sale and the present condition IMPC and also HP. Is that highly on sale is highly probable.
Yes, ISPC. The
ISP.
asset or the disposal group is available for immediate sale in present condition. Immediate sale in present condition, and the sale must be highly probable. And the sale must be highly probable, right? So it is available for immediate sale in present condition means there must be an intent and ability to sell the asset, right? So for example, you have an intent to sell the asset, but due to some regulatory restrictions, you are not able to sell the asset. In that case, you cannot classify that asset as held for sale. Okay. So ISPC conditions should met and HP conditions should also met. When the sale will be considered as highly probable, the sale will be considered as highly probable in two situations. Situation number one, the sale will be considered as highly probable when the management is committed to a plan to sell the asset. Number two, the asset, the for the asset sale, the active program has been initiated to locate a buyer, means searching of buyer has been initiated, means the company has started searching the buyer. Okay. Third, the the product, or I mean to say the asset, has been marketed at a reasonable price in comparison to the market value. For example, if you want to sell a mobile phone, the market value of the mobile phone is 20,000, and you have already established a price of 50,000 rupees. Your asking price is 50,000 rupees. Don't you think that asset will not be able to sold out? Of course it can't be sold out, right? If market price is 20,000, your asking price is 50,000, it means you are just want to playing with the numbers. You don't want to actually sell the asset, right? So what is the third condition? The asset has to be marketed at a reasonable price. Fourth, it is likely, or the sale is going to be happen so within 12 months from the date of classification as held for sale, means this transaction is most likely to be going to this transaction is most likely going to be actualized as a sale within 12 months from the date of classification as held for sale, right? Last, it is unlikely that the sale plan will change. It is unlikely that the sale plan will change. Okay. So friends, these are the conditions when you will establish that yes, this item has to be classified as sale, held for sale. And friends, whenever a non-current assets or a disposal group will be classified as held for sale, it has to be shown under a separate line item in the balance sheet as a non-current asset held for sale or disposal group held for sale, and it come under current assets. Friends, when an individual item or group of asset will be classified as held for sale, the depreciation or amortization has to be stopped immediately on the date of classification as held for sale. Friends, talking about the measurement criteria, when an item, I mean to say when an individual asset or group of asset is classified as held for sale, it has to be measured. It has to be measured on the date of classification as held for sale. It has to be measured at the lower of carrying value as per the respective standard and fair value less cost to sell. For example, if a building has been classified as held for sale on 30th on 30th September 2025, then you have to determine the carrying value of that building as per Ind AS 16 on 30th September 2025, and you have to determine fair value less cost to sell of that building on 30th September 2025, right? So whatever is the lower value, that lower value will become a value of the non-current asset held for sale. Okay, so this was the overall context. This is a revisionary class. This is not the first class on Index 105. This is a revisionary class, and I have revised your, what is the basic concept, what is the coverage, how it is going to be recognized. I mean to say, when asset will be classified as held for sale, how it is going to be measured, right? And now, friends, now, so quickly, first of all, I'll quickly take one of the questions from my PowerPoint presentation, and then I'll move to the question in the Word file, right? Sounds good, Saminathan?
Yes, sir. Perfect, sir.
Yes. Yeah. A property is purchased for rupees 5 lakh on 1st April 2018. The useful life of the property is 20 years, zero residual value. Zero residual value. Why this is important, this word zero residual value?
Because it is useful for the depreciation, calculation depreciation.
Yes. Yes. This concept is important from the perspective of depreciation calculation. 5 lakh rupees the cost, 20 year is the life with zero residual value. This 5 lakh divided by 20, it comes out 25,000 rupees depreciation per annum. The property is measured subsequently at depreciated historical cost. What is the meaning of this line? Is measured subsequently at depreciated historical cost. In Ind AS 16, there are two models. At the time of subsequent measurement, there are two models. Number one, cost model. Number two, revaluation model. So this property is measured subsequently at cost model. On 30th September 2020, it is decided that the property is to be classified as held for sale as classification criteria are met, right? So from 1st April 2018 to 30th September 2020, what is the period in between? 2.5 years, right?
Yeah, two
1st
and a half
April
years.
18 to 30th September 20, 2.5 years, correct?
Yes, sir.
Yes. It is decided that the property is to be classified as held for sale. Classification criteria are met. An impairment assessment on 30th September 20 determines the recoverable value based on value in use to be rupees 4 lakh. Friends, the fair value less cost to sell on 30th September 2020 is 3,90,000. Now, you need to determine what is the carrying value of the property on the date of held for sale, right? And what is the value of this non-current asset held for sale? At what value it is going to be classified as held for sale? Now, question number one. What is the carrying value as on 30th September 2020? How we will determine the carrying value, Saminathan?
So carrying value will determine that initial period, that 5 lakh divided by 20 is 25,000, and 2.5 depreciation we have to provide 5 lakh minus 62,500.
Yes,
That will be the carrying value. And
yes,
there is a impairment. The impairment of asset that as on 30 years determines the recoverable value is 4 lakhs.
yes.
So
So,
from 5 lakhs, 5 lakhs 62,500, it comes is 4 lakh 37,500 is a cost, a carrying value. When we are comparing carrying value with that recoverable value, recoverable value is 4 lakh. Since it is a cost model also we will provide the impairment loss. So 37,500 will goes to the impairment loss. The carrying value will be 4 lakhs rupees. Again,
Yes.
we have to compare with the fair value less cost to sell. Cost to sell is 3 lakh 90,000 and the carrying value is 4 lakh. The lower of both, which means the fair value less cost to sell will be taken as a value for this
Yes, you're
when we are
absolutely
classifying
right.
the
Yeah. Yes.
non-current asset held for sale.
Yes, you're absolutely right. So first of all, we need to determine the carrying value as per the respective standard. Respective standard means in this case, the respective standard is Ind AS 16 property, plant and equipment. Up to the date of classification is held for sale, right? And Ind AS 16 says that whenever you need to determine the carrying value, the formula is cost minus accumulated depreciation minus accumulated impairment losses. So as beautifully explained by Saminathan, the cost is 5 lakh and 2.5 year depreciation is 62,500. When you deduct 62,500 from 5 lakh rupees, you will get 437,500. 4 lakh 37,500. But the recoverable value is 4 lakh. It means 37,500 is impairment loss, right? And my dear friends, going by the conservatism, going by the principle of conservatism, right? If doesn't matter whether you are in cost model, revaluation model, whenever your value of assets will decline, whenever your value of asset will decline, you have to decrease the asset value, right? But when your value of the asset is increasing, in that case, you are not going to take that increase until and unless you are on a revaluation model. Okay? Or you only are going to take the increase only to the extent of past decrease, past impairment losses. Means if your value becomes less than cost, you will take it, right? But if your value becomes more than cost, then you will take it only if you have opted for revaluation model. Otherwise, answer is no, right? Yes. So my dear friends, if I talk about this question, what is the carrying value? The carrying value is 4 lakh rupee and the fair value less cost to sell is 390, right? So what is going to be your value of the non-current asset held for sale? Lower. Which is lower, 4 lakh or 390? Of course, 390 is lower. So we are going to again record an impairment loss of 10,000 rupees. And what is the accounting entry? Accounting entry is non-current asset held for sale account debit 3,90,000. Impairment loss debit in P&L 10,000 rupees. Two, property, plant and equipment building, right? 4 lakh rupees. Okay. And this impairment loss of 37,500, it has already been debited, right? So you have to pass an accounting entry for depreciation for impairment loss. So now your PP value becomes 4 lakh rupee. And now you're moving this PP value of 4 lakh to non-current asset held for sale at 390, right? Is that clear?
Yes, sir.
Very much
Clear, sir.
clear?
Very
Okay,
much clear, sir.
very good, very good. Now, I'm moving to the question number one. And friends, what is this question number one? Following is the extract of the consolidated financial statement of A Limited for the year ended on 31st March 20x1, right? Attributed goodwill is 200,000. These numbers are in thousands. I hope my questions are visible. The word
Yes,
file
sir.
is visible.
Yes, sir. Visible, sir.
Are you able to read it properly, Saminathan?
Yes, sir.
Yeah. So attributed goodwill is 200,000. Intangible asset is 950. Financial asset measured at fair value through other comprehensive income is 300. Property, plant and equipment is 1100. Deferred tax asset is 250. Current assets, inventory, receivable, cash balance is 600. Current liabilities is 850 and non-current liability provision is 300, 2250. Okay. This is the values which are given, right, for a disposal group held for sale. Seemingly, it is a disposal group held for sale. A lot of assets and liabilities are there, right? Correct?
Yes, sir.
Yeah.
Yes, sir.
So, friends, when it is an individual asset held for sale in Ind AS 105, it should always be a what? It should always be a
Asset held for sale.
it should always be a non-current asset, right? So
Non-current asset.
yeah.
Right, sir.
So that asset should always be a non-current asset for becoming it as a non-current asset held for sale. But if it is a group of asset, if it is a disposal group, it can be a combination of non-current asset plus current assets and liabilities as well. Okay, and liabilities as well. So friends, this is a disposal group held for sale. Number two, as far as measurement as far as measurement of the assets are concerned in Ind AS 105, when an asset or a disposal group becomes held for sale, all the assets are required to be measured as per Ind AS 105 except few assets. Can you tell me what is the negative list? Financial asset.
Yes, sir. Financial asset, insurance contract,
Yes.
and income tax,
Yes. Deferred tax, income tax. Yes.
and employee benefits.
Employee benefit, biological assets, right?
Yes,
So
yes, sir.
these were the five categories. So biological asset, financial asset, insurance contract assets, right? Employee benefit asset, plan asset, which is, and deferred tax asset, income tax asset. So these has to be measured as per the respective standard. As per the respective standard means financial asset, deferred tax asset, and current asset is also not coming in the purview. Current liabilities, okay, liabilities are also not within the purview of Ind AS 105 from the measurement perspective, correct? Yes.
Yes,
So
sir.
these has to be measured as per their own, remeasured as per their respective standard, correct? Okay. Now let's move further. So 2250 is the value. 2250 is the net value of this group, disposal group. On 15th September 20x1 means after how many months? After 5.5 months.
5.5 months.
On 15th September 20x1, entity A decided to sell the business. It noted that the business meets the condition of disposal group classified as held for sale on that date in accordance with Ind AS 105, right? It noted that the business meet the condition of disposal group classified as held for sale on that date in accordance with Ind AS 105. Okay, so 15 September 20x1 is the date when this asset become classified as held for sale. However, it does not meet the condition to be classified as discontinued operation in accordance with that standard. So this question has clarified that, of course, it is a disposal group. It is a disposal group classified as held for sale, but it is not a discontinued operation. What happened if it would have been a discontinued operations? So a discontinued operation can also be a disposal group, right? From the
Yes, sir.
accounting perspective.
Yes, sir.
But what happens if a disposal group becomes a discontinued operation also? Then additional disclosure and presentation requirement is there, right? If a disposal group becomes a discontinued operation, you have to show the result of discontinued operation separately in the statement of profit and loss, right?
Yes, sir.
Yeah. So you have to show the results. I mean to say income, expenses, profit before tax, tax, profit after tax from continuing operation as well as from discontinuing operations. And you are also required to show the earning per share from continuing operations, from discontinuing operations, and from total operations. Correct?
Yes,
So
sir.
when a disposal group becomes a discontinued operations, for example, a company, multinational company is doing a business in India. For example, they have only one factory in India. They are operating from Delhi. Okay. They are operating from Delhi. They have only one factory in India. So they decided to wrap up their business from India and they dispose of that factory. that only factory. So of course, this sale of factory is a disposal group held for sale. But whether it is a discontinued operation also for that company? Answer is yes. Answer is yes. The discontinuation or disposal of that factory is also resulting into in shutting down the business in India,
Yes, sir.
moving from a country, moving from a geographical location, moving from a territory, right? So in this case, when this multinational company will prepare the financial statement, of course, since it is a disposal group held for sale, so the disposal group held for sale has to be measured as per the lower of carrying value and fair value as cost to sell. Okay. Whatever impairment loss is there, it has to be charged to the profit and loss. And as well as the performance is concerned, I mean to say statement of profit and loss, the result of India operations, India business, the result of India operations, India business has to be what? Has to be shown separately, right?
Yeah, disclosed separately.
Yeah, as a discontinued operations. Is that clear?
Yes, sir.
Okay.
Clear, sir.
So, see, we are discussing a question and we are discussing a lot of concepts also, correct? We are revising a lot of concepts.
Yes, sir.
That what is the relevance of this line, right? And while talking about this relevance of this line, we have revised the additional disclosure and presentation of discontinued operations also, right? So when you appear in your exam, so your mind will work like this only. Okay. Yes. The disposal group is stated at the following amounts immediately prior to reclassification is held for sale. And few numbers are given. Right. So that number was on 31st March 20x1. And now this number is carrying amount as on 15th September 20x. What is the number which is given? Attributed goodwill is 200. Intangible asset is 930. Financial asset measured at FVT OCI is 360. PP 1020. Deferred tax assets 250. Uh, current assets is 520. Current liability is 870. And non-current liability provision is 250. The total is 2160. Entity A proposes to sell the disposal group at 19 lakh rupees. So this is 21 lakh 60,000 rupees. But entity A proposes to sell the disposal group at 19 lakh rupees. It estimate the cost to sell will be 70,000 rupees. The cost consists of professional fee to be paid to the external lawyer and accountants. Okay. So carrying value is given and fair value less cost to sell of the disposal group is given. Okay. 15 September 20x1. Then on the reporting date, as on 31st March 20x2, there has been no change to the plan to sell the disposal group and the entity A still expect to sell it within 1 year of the initial classification. So while up to the reporting date, this asset has not been sold out, this group of asset has not been sold out, but yes, it is good for sale even on the reporting date. So friends, if there is a non-current asset held for sale or a disposal group held for sale and actually it has not been sold out on the reporting date, then it is going to be measured at which remeasured at what value? It is going to be remeasured at what value?
Again, we will remeasure the carrying value.
Fair
Uh,
value less cost to sell,
yeah,
Saminathan.
yes. We will check that the carrying value, fair value less cost to sell, whichever is lower.
No, Saminathan. So basically, once an asset or group of assets is classified as held for sale, on the day one, at the time of initial recognition, you have to measure at the lower of carrying amount and fair value less cost to sell. Okay. But once an asset becomes classified as held for sale or the disposal group becomes classified as held for sale, then on the reporting date, like in this question, on 15 September 20x1, you have to recognize this group of assets, disposal group, at a lower of carrying amount and fair value less cost to sell. Okay. But on the reporting date, you have to remeasure it at fair value less cost to sell, right? And there could be three situation. Situation number one, fair value less cost to sell will not change. Means whatever whatever was the value at which you have recognized your disposal group held for sale, the on the reporting date the fair value less cost to sell is same. Of course, no change. If your fair value less cost to sell decline, you are required to recognize your impairment loss again. If your fair value less cost to sell increase, then you are required to recognize the increase only to the extent of past cumulative impairment losses. Only to the extent of cumulative impairment losses recognized in the past. Do you remember that?
Yes, sir.
Yeah. So there are some values given on 31st March 20x2 also. And the demand of the question is compute the value of all assets and liabilities within the disposal group as on the following dates in accordance with Ind AS 105 on 15 September and 31st March 20x2. Let's solve this question on the Excel file, right? Okay.
Okay,
Shall
sir.
we do this? Okay.
Yes, please.
So, yes. Let me open the Excel file and we'll show all the calculations in the Excel file so that you will be able to understand it easily. Please confirm once the Excel file is visible. Is it visible now?
Not yeah,
Visible?
yes, visible.
Okay. So, Ind AS 105. Question number 1 of the Word file, right? Question number 1 of the Word file. And let me copy this table of assets and liabilities. Just allow me a minute. Yes. Friends, these are the values which are given, right? Can you see on the screen?
Yes, sir.
Yeah. These are the carrying amount. Okay. So now what is my step one? My step one is to compute the carrying value on the date of classification as held for sale. You remember step number one, right?
Yes, yes, sir. We need to
Yes.
compute the carrying value, right?
Yes. And the carrying value is given in this question. If you see, the disposal group is stated at the following amount immediately prior to reclassification as held for sale. What is meaning of immediately prior to reclassification as held for sale? Immediately prior to reclassification as held for sale means, it means your, technically
Car-
speaking, your
Carrying value.
carrying value on the date of held for sale, right?
Yes,
Your
sir.
carrying value on the date of held for sale. Okay. So let me copy it here. Yes. So yes. Just a minute. Yes. Yeah. Yes. So step number one is carrying amount on the date of held for sale. This is your step number one. Okay. Now, what is my step number two? Fair value less cost to sell. My step number two is fair value less cost to sell, right? Step number one is the carrying amount. You need to determine the carrying amount immediately before reclassification is held for sale, means on the date of held for sale. Step number two, fair value less cost to sell. Fair value less cost to sell. Okay. This is my step number two. Friends, now this was the carrying amount as on 31st March. This is the carrying amount as on 15th of September. Okay? And these are the values. This goodwill becomes from 200, it is 200. Intangible asset is from 950, it become 930. Why this 950 becomes 930? What is the reason for decline?
So there is a
Amortization.
amortization.
Amortization. Financial asset is from 300, it becomes 360. Why it has increased?
The
Due to fair value.
fair value.
PP from 1100, PP become 1020. Why PP has declined?
Depreciation or
Depreciation.
impairment. Yeah.
Depreciation or impairment, you are right. Deferred tax asset is same 250, 250. Current assets from 600 it become 520. Movement in inventory, receivable, other bank balance, cash balance, right?
Or
Current
absolute.
liability 858, 850 of current liability become 870, largely operational. Non-current liabilities provisions from 300 it is declined to 250, largely operationals. Might be liabilities have been paid off. Okay. So from double to 50 it become 2160, right? So this is your step number one, your carrying amount. Now, my dear friends, what is your step number two? Fair value less cost to sell. What is the fair value less cost to sell? Can you tell me? What is the fair value less cost to sell? How much is the fair value less cost to sell? 19 lakh. You
19
remember
lakh.
they have
Yeah.
given 19 lakh and 70,000 is the cost to sell.
We have to
So
reduce that. We have to reduce from 19 lakhs, that is
yes.
70,000.
So 19 lakh means 1900,000 minus 70,000. So this is your 1830 is your fair value less cost to sell. Now, what is the impairment? From 2160, it become 1830. 330. 330 is the impairment, right?
Yes, sir.
So disposal group classified as held for sale has to be measured has to be measured at lower of what?
Carrying
Lower
value
of carrying value
and
carrying
fair
value
value less cost to sell.
on the date of held for sale and fair value less cost to sell, right? So let me write carrying value on the date of held for sale as a step number one, step one, and fair value less cost to sell as a step two. Okay, step two. So what is this number? 330. So 330 is what? 330 is impairment loss. 330 is the impairment loss,
Yes, sir.
right?
Impairment loss.
So what is the accounting entry? Accounting entry is, what is the accounting entry? Disposal group, DGHFS, disposal group, HFS, account debit, disposal group, HFS, account debit by what amount? What is
18 lakh.
lower?
18 lakh 30,000.
18 lakh 30,000. Very good. To to disposal group, to disposal group account. So to disposal group account credit. It is credited by what value?
21 lakh 60,000.
2160. Yes, yes, 2160, right? 2160. Where the difference will go?
Impairment loss.
Impairment loss. Of what amount? Impairment loss of what amount?
3 lakh 30,000.
balancing figure. 3,30,000. Now the question is how this 3,30,000 has to be allocated, right? What are the revised value of the disposal group held for sale? What is the value of DGHFS? What should be the value of the DGHFS? The value of the DGHFS has to be lower of this. So the point is how this impairment loss is going to be allocated, right? So of course it should be the value, right? The fair value less cost to sell is 1830. Okay. And what should be the value? The value of the DGHFS is 1830. But how come this 1830 will come? How this 1830 will come?
You said
Allocation of impairment loss. Allocation of impairment loss. Impairment loss. Allocation of impairment loss. How will we allocate impairment loss?
sir,
Saminathan, how will we allocate?
first we will allocate to that goodwill. Then we have to allocate this impairment loss with respect to those asset which valued as per the Ind AS 105.
Yes, you're absolutely right. First, what we will do? First, we will strike off the goodwill, will hit the goodwill, right? So first, for this impairment loss, what we'll do? Total impairment loss is 330. What should we do? Minus 200. We'll finish off the goodwill. Now, how much is left? 130 is left. So friends, goodwill is over. Whether I should allocate impairment loss on intangible asset?
Yes, sir, we will allocate, sir.
Yes, we will allocate. So we will allocate. So goodwill we have done. Intangible asset we will also allocate. Intangible asset will also allocate. And what about financial asset?
No, sir, we will not do that.
No, because it is outside the purview of Ind AS 101. Property, plant and equipment?
Yes, sir, very much.
Yes. Yes. Deferred tax asset?
No,
No. Current tax? Current
no,
assets? No.
no. It has to
Liabilities? No.
liabilities. No.
No. Okay. So then 130. Remaining is 130, right? So I have to allocate 130 in the ratio of what? In the ratio of
Ratio of intangible and property.
and PP. Very good. Then minus 130 multiply by 930 divide by sum of what? 930 plus 1020. I hope this is clear. This is okay.
Yes, sir.
Minus 130 multiply by 1020 divide by 930 plus 1020. Okay. So now the total comes at 330. So now individual assets and liabilities. What is the value of individual assets and liabilities of disposal group held for sale? What is the value? Goodwill. The value of the goodwill become 0.
0.
The value of intangible asset is 868. The value of what? The value of financial asset is, again, in financial asset there is no impairment allocation, right? So the value of PP&E 952. The value of deferred tax 250. The value of current assets 520. The value of liability this is. So let me check the total. Whether total is coming at 1830. Ideally it should be, right? 1830. Okay. That is coming at 1830. Yes. I hope it is clear. It is
Yes,
clear.
sir.
So
Very
this
much.
is at the time of initial recognition. These are the value of DGHFS on 15th September. On 15th September, right? Now, so 15th September की value तो पता लग गई. Now, how will we allocate these values on 31st December? So friends, this was the values on 15th September. What was the demand of the question? Compute the value on 15th September and 31st March. Okay. So first part is over. First, what was the first part? The first part was A. Compute the value on 15th of September. B. Compute the value on 31st March 20x2. Right. So friends, let me again copy this list of assets and liabilities. And now what I'll copy? I'll copy the value of DGHFS, right? The value of
Yes,
DGHFS
sir.
on which date?
On the 15th
DGHFS
September.
on
15th.
DG, yes, DGHFS as on 15th September, okay? As on 15th September. Now, because initial recognition is closed, so let me take these values from here. So what is the value of DGHFS? 1830, correct?
Yes, sir.
This is the value of DGHFS. Now, yes, now let's see what the information is given for 31st March 20x2. On 31st March 20x2, there have been no change to the plan to sell the disposal group, and entity still hold it for the classification as held for sale. And the values are given. Mr. X, an accountant of an entity, remeasured the following assets and liabilities in accordance with the respective standard as on 31st March 20x2. Right? So these items, financial asset, deferred tax asset, current assets, current liabilities, non-current liabilities, so their values are given. Their values are given. Okay. So let me put their values there. Shall I put their values?
Yes, sir.
So let me put the values of, so this is what, this is my DGHFS value as on 31st March 20x2, right?
Yes, sir.
So value of financial asset is given. What is the value of financial asset? 410. It is 410. Okay. Financial asset value is 410. Then the value of deferred asset is 230 and current asset is 400. So deferred tax is how much? 230. And the current assets value is 400. And the value of liabilities are 900 and 250. So minus 900 minus 250, right? These values are given. These values are given. Okay. So these values are given. Now, what else is given, Saminathan? So it is given that the disposal group has not been trading well and its fair value less cost to sell has fallen to 16 lakh 50,000. What is given? Fair value less cost to sell is given for the disposal group. And how much it is? 16 lakh 50,000. So subsequently, disposal group classified as held for sale has to be remeasured on the reporting date at what? At fair value less cost to sell. Okay. At fair value less cost to sell. Subsequently, disposal group classified as held for sale has to be remeasured on the reporting date at fair value less cost to sell. Right. So what is the fair value less cost to sell given in this question on the reporting date?
16 lakhs 50,000.
16 lakh 50,000. 1650, right?
Yes, sir.
Numbers are in thousands, 1650. So from 1830 it becomes 1650. What is the subsequent impairment? From 1830 it becomes 1650. What is the subsequent impairment, Saminathan?
1 lakh 80,000. 180.
1
80.
180, right?
Yes, sir.
So 180, but this out of this 180, of course, 1830 minus 1650, your decrease, impairment or decrease, or rather I would say impairment oblique decrease, because there are some natural decrease also, like liabilities have gone up, right? So then your net assets will decrease, correct?
Yes, sir.
Some natural operational decrease also, na?
Yes, sir.
Because all the assets, Saminathan, and all the liabilities, everything is not come in the purview of Ind AS 105 from the measurement perspective. So talking about these things. So let's see, talking about this, let's see. So your DGHFS values, few assets liabilities values have been given as per the respective standard. So what is your normal increase or decrease, normal changes, your change? Have you understood what we are doing? The
Yes,
the
sir. Yes, sir.
total the total value of the disposal group has been decreased by 180. But whether the entire decrease is impairment loss, answer is no. Answer is no, right? Why? Because there are some assets and liabilities also sitting here where there was a natural change as per the respective standard, change in value.
Yes, sir. On for those standard, it has increase and decrease as well noted.
Yes.
We have to, yeah.
So if you see financial asset, but this financial asset has gone up. Why? Because there must be a mutual fund equity share which has gone up. The value has gone up. The market value has gone up. Your deferred tax asset, the value has gone down, right? Your current asset, the value has gone down. Your liability value has gone up for the liability, right? Your this thing. Your what is there, non-current liability provisions, the value is same, the value is same. So what is the decline? The decline is 120, the change in value is 120, the change in value h per respective standard, h per respective standard. So what is the remaining loss?
60 lakhs.
So DGHFS 31st March 20x2 h per respective standard, right?
60,000. 180, 120.
60 na, 180 is the total decrease, so 60 bacha na.
Yes, sir. 60,000 is the decrease for the 05 related asset.
Okay, so now impairment loss, h per Ind AS 105. Okay, as per Ind AS, impairment loss as per Ind AS 105. So friends, this attributed goodwill is 0, so of course it will be 0, no change, correct?
Yes, sir.
Then your intangible asset is 868. Okay. So this decrease has to be allocated to impairment in intangible asset. Financial
Yes,
asset
sir.
we have already treated. Financial asset is not come within the purview of this, right? Then your property, plant and equipment, of course, it will come to the purview of Ind AS 105, right?
Yes, sir.
So whatever is the subsequent decrease, we will allocate to intangible asset and PP&E. For rest of the assets and liabilities, already we have taken
Taken
the
care.
change as per the respective standard. Correct? Okay. So now I need to reduce it by 60. 60 multiply by 868, right? Divide
Divided by
by
868,
868 plus 950,
950.
right? 28.62. Again, 60 multiply by 952 divide by 868 plus 952. $60. So friends, now what is the value of my DGHFS finally? What is the value of DGHFS? Finally, the total has to come as 1650, correct? So goodwill
Yes, yes,
0.
sir.
So this was 0. This plus this is 0. And these are the values. And what should be my total? My total should be 1650. Yes, the total Saminathan is 1650. So means we are good. We are
Yes,
good now,
yes, sir.
right? So friends, this is how we need to carry out this entire exercise, right? We need to carry out this entire exercise. Okay. I hope it is clear now. Yes. Yeah. Is that clear?
Yes, sir. I think this particular question is covered most of that in days
Yeah.
105.
Yeah. Okay. Yes. So friends, now let's move to the next question. Yes. Question number 3. Identify which of the following is a disposal group as at 31st March 20. Yeah, just a minute, friends. On 21st, so basically there are three situations, and the ask of the question is, I hope the the word file is visible, right?
Yes, sir. Visible, sir.
Question number 3 is asking about which situations are disposal group as on 31st March 20x1. On 21st March 20x1, XYZ announced the board's intention to sell its shares in a subsidiary company, right? On 21st March 20x1, XYZ announced the board intention to sell its shares in a subsidiary company, right? Alpha, contingent upon the approval of Alpha's shareholders. So we are talking about 31st March 20x1, and 10 days before the reporting date, the board of XYZ company, this XYZ company has invested in a subsidiary, right? And the board of this holding company announced to sell the share in subsidiary company. But this sale is subject to the approval of the shareholders. And it seems unlikely that the approval will be granted in the near future, and no specific potential buyer has been identified. And friends, it is also unlikely that the approval will come in near future. And the potential buyer and no specific potential buyer has also been identified. Whether it will be classified as held for sale.
No, no, sir. There should be an immediate sale in the present condition, and the sale must be highly probable. In this case, that approval is not there. It's unlikely to be approval will be granted. The near future, it's not approved now, and also no specific potential buyer has the one of the five condition. There are five conditions, out of which one condition is the specific potential buyer has to be identified.
So basically, you are right, since this entire transaction is depending on the shareholder approval, right? Means if the shareholder approval will not come, the company does not have a ability to sell. The company has an intent to sell on 21st March 20x1, and even on 31st March 20x1, the company has a intent to sell, but the company does not have an ability to sell, right? So in this case, since the company does not has an ability to sell, in this case, what will happen? Since ability is not there, then ISPC condition is not meeting. And it is also clear in this question that it is unlikely that the approval will be granted in near future, right? Okay. So friends, in this case, since it is not available for immediate sale as shareholder approval is required, and no specific potential buyer has also been identified, right? While if you read the five condition, those five condition does not says that the potential buyer has to be there, but those five conditions says that management must be committed. The active program to locate means searching a buyer has started. Doesn't matter potential buyer is there or not, but searching a buyer has to be started. Number three, the price should be reasonable. Number four, it is likely that the sale is going to be concluded within 1 year from the date of classification is sent for sale. But here it says that the approval is also unlikely in the near future. Okay, right? So basically looking at all these conditions, this investment is not classified as a disposal group, or this subsidiary is not classified as a disposal group, right? Okay, it is not classified as a disposal group. Now, question number two. PQR has entered into a contract to sell the entire delivery fleet of vehicles operated from its warehouse to a competitor ABC. PQR has entered into a contract to sell the entire delivery fleet of vehicles operated from its warehouse to a competitor ABC on 14th March 20x1. Okay, this PQR has entered into a contract, already entered into a contract. To sell what? To sell the fleet of vehicles, bunch of vehicles, fleet of vehicles operated from its warehouse to a competitor ABC on 14th March 20x1. The assets will be transferred on 28th April 20x1, from which date? So the asset will be transferred on 28th April 20x1, from which date the group will outsource its delivery activities to another company, LMN. Right. Tell me, in this case, whether this fleet of vehicle will be classified as held for sale on 14th March 20x1. What's your view? Saminathan, what would you say?
Yes, sir. Group will be outsourced its delivery activity to another company, LMN.
Hmm.
They, it's a control is fully with the company only, which means PQR.
Hmm.
So
So how does it matter?
I think it is not a disposal group.
Saminathan, so if you see in this case, PQR has already entered into a contract to sell. There is a agreement, there is a contract. The buyer has been identified, right? So
Yes, sir.
PQR
Buyer
entered
ID.
into to sell the entire delivery fleet, okay, operated from its warehouse to a competitor ABC. So PQR has sold the fleet of vehicle to ABC on 14th March. So you are ABC, I am PQR. So we have entered into a contract and I am telling you, Mr. ABC, Mr. Saminathan. So today is 14th March 20x1 and we have exchanged a contract. I am ready to sell these vehicles to you at a predetermined price of so and so, right? So this is kind of an agreement, but the only thing is I will transfer this vehicle on 28th April. Means 28th April means 1 month and 14 days after. Okay. And from which date? And from this date, this PQR group will outsource its delivery activities to another company, LMN. Since now PQR does not have the fleet of assets, so what PQR will do? Delivery activity किसको outsource कर देगा? किसी और को कर देगा. Right? So probably if you see this transaction, if you see these three sentences, how these three sentences are sequenced. Number one, PQR is a company which is doing delivery activities by its own vehicles, right? They have 10-20 vehicles, they have fleet of vehicles, and they are performing the delivery activity by their own vehicles. Now, might be due to cash crunch, might be due to some XYZ reason, they wanted to sell all their fleet of vehicles to somebody else, right? And who is that somebody else? To their competitor only, who is ABC. They have already entered into a contract. Buyer has already been identified. The agreement, the binding agreement or the agreement has been entered, right? the sale is likely to be concluded within 1 year. And here PQR is saying that ABC, please do one thing. So allow me 1 month and 14 days, and after 1 month and 14 days on 20th April, I will transfer my all these vehicles in your name. Okay, because I have to apply for the transfer papers also, and it will take around 30-40 days, and I'll also settle down. So allow me 44 days. After 45 days, I will transfer these vehicles in your name. Okay, so PQR will transfer in 45 days only, right? And after that, PQR, since now this group does not have any vehicles, so of course all the delivery activity this PQR is outsourcing to some other company. Okay, so the last line is like just to confuse you or just to test your knowledge, but the first two line is very much clear. The PQR has a ability and intent to sell the asset, right? If the ability would not have been there, PQR would not have been entered into a contract. If the intent would not have been there, probably no. Whether PQR management is committed to a plan to sell the asset. Saminathan?
Yes,
Yes?
sir. Yes, sir.
Yes. Okay. Saminathan, whether the program for searching a buyer has been started? It
Yes,
has
sir.
been
Already
finished
started
also.
and identified and contract also initiated. It's very much sure now.
It has been finished also, not started, it has been finished. The
Finished.
buyer has
Finished.
been identified, right?
Yes, sir.
Whether asset is marketed at a reasonable price. Saminathan, the price has already been locked.
Yes, sir.
Contract ही हो गया ना?
Yes.
Yes, so contract is there. It means the price is agreed by the buyer also. Fourth condition, whether this transaction will be actualized as a complete sale within 1 year.
Yeah,
Don't
within
go to
one
within
month.
1 year. It is
Within
in
one
next
month.
45 days, right? And the last one, it is unlikely that the sale plan will change. It is going
No.
to be transferred and this company will outsource the delivery activity also. All these five conditions are meeting, my dear friend. So whether
Yes, sir.
this fleet of vehicle will be classified as a non-current asset or as a current asset?
Non-current asset.
As
Hundred
a
percentage.
current asset. करंट
Say
एसेट
current.
में आएगा ना,
Sir,
डिस्पोजल ग्रुप हेल्ड फॉर सेल.
sir, I mean to say the non-current asset held for sale.
Okay, non-current asset
Mhm.
held for sale. So basically, it will be disposal group held for sale.
Yes,
Okay.
sir.
Yeah, very good. Now the third situation, my dear friend, third situation.
Actually, I
On
confused
6th.
with actually on the second part. I confused with the second line. Actually,
Hmm.
a group will be outsourcing a delivery activity to another company. Say, okay, now it's very much clear, sir. Thank you so much.
On 16th January 20x1, DEF Management, DEF is a company, their management and shareholder approved a plan to sell its retail business in Mumbai. Okay, so the management and shareholder both has approved a plan to sell its retail business in Mumbai, and a consultant is hired to manage the sale. And a consultant is hired to manage the sale. Okay. As on 31st March 20x1, agreement had been signed, although due diligence and the negotiation of final terms are still in process. Agreement had been signed, although due diligence and the negotiation of final terms are still in process. The transaction is expected to be completed in April 20x1. Okay. So as on 31st March 20x1, on 16th January, management is committed to a plan to sell the asset. The plan has already been approved. Okay. So they want to sell the retail business in Mumbai, and consultant is also hired to manage the sale. Means active program to locate a buyer has started. The consultant has this task is given to a consultant. Okay. As on 31st March 20x1, agreement had been signed. Means what?
Active buyer identified and
Yes.
complete signed.
Although due diligence and the negotiation of final terms are still in progress, right? While principal terms have been agreed, agreement had been signed, And so normally what happened when you do these kind of sale or acquisitions, so due diligence is the part and parcel of the process, right? So, but largely seller and buyer are aligned. They have entered into the contract, and so basically, and they told that principally we have agreed until and unless some big problem may not be there, we will not back out. Okay. So it means management is committed. Active program was started. Buyer has also identified. Agreement has been entered. The negotiation and final terms are in progress. Okay. It will always take time. The transaction is expected to complete in April 20x1 also. So on 16 January on reporting date, right? So the transaction is expected to complete in next 1 month. Tell me, is it whether this is a disposal group held for sale or not on 31st March 20x1?
Yes, sir. This is very much disposal group, sir. It's all conditions are met.
It is. All conditions are
Met.
all conditions are met. So it will be classified as a disposal group held for sale.
Yes, sir. Very much.
Yes.
100%.
Yes. Pakka.
Paka, sir.
Okay. Yes, right. So basically, in this case, of course, if until and unless some contrary things are not there, so basically the sale of retail business, what it is saying. So let's see the answer also. It is saying that DEF sale of retail business will not be completed until the final term. For example, purchase price are agreed. However, the business is ready for immediate sale and the sale is highly probable unless other evidence after the reporting date but before the approval of financial statements comes to the light to indicate the contrary, right? If after reporting date something, as I told you, na, they will not back out until and unless some big issue may not be there, correct?
Yes,
Okay,
sir.
so yes, so as on 16th January, as on this date 16th January, or as on 31st March, it will be classified as held for sale. Is that clear?
Yes, sir. Very much clear, sir.
Very much clear? Yes.
Yes.
Now let's discuss one of the concept of one of the concept of change in plan, right? And what is that? Let me tell you. So quickly we'll discuss this. Friends, the fifth condition was it is unlikely that the sale plan will change. It is never written in the standard that it is impossible that the sale plan will change. It is unlikely that the sale plan will change. Okay, friends, when I'm talking to a changes to a plan of sale, so let's say, normally in my regular classes or normally I always give an example when a change in plan may happen, right? And let me give you again this example. So prior to COVID, there were two factories of sanitizers. Okay. Saminathan, you may be aware about this
Yes, sir.
example, right? So prior to COVID, there were two factories of manufacturing sanitizers. Okay. So in August 2019, the management decided to sell one of the factory and they classified it as held for sale. When the COVID hit China in December 2019 and India in February 2020, right? The demand for sanitizer was like anything. Every fourth house was manufacturing sanitizer with the help of YouTube. Every company started selling sanitizer, be it Cipla, be it Sun Pharma, Renbexy, Dabur, whatever, right? Hindustan Unilever, ITC, everyone started manufacturing sanitizer. Friends, since prior to COVID, the demand was limited, but after COVID, the demand was, extensively high. So instead of selling this factory, this company is thinking about acquiring one more factory. So of course, they changed the plan of sale. So what happened in that case? When in August 19, up to August 19, this factory was in Ind 16 PPE. When they classify it as held for sale. When there was a plan of sale, it becomes Ind AS 105 non-current asset held for sale. When they change the plan, it again go back to Ind AS 16 property, plant and equipment. So we understood when at the first moment up to August 2019, when it was Ind AS 16 PP, we were following the principle of Ind AS 16 PP, and we were on the every reporting date, we were depreciating, checking the impairment, computing the carrying amount, and doing our normal business. When it becomes held for sale, what we do? We do also in that case also, what we do in that case also, so at the date of classification as held for sale, we computed the carrying amount as per the respective standard, and then what we do, and then we find out the fair value less cost to sell, and whatever is lower, we have recognize that value as a held for sale value, right? But now what happened when again it is going back to Ind AS 16 PPE, right? When it is going again back to Ind AS 16 PPE, friends, just allow me a second. Yes, what happened? So standard says that when the held for sale criteria are no longer met, the assets should be removed from the held for sale category. And in that case, when the plan ceases or when there is a change in plan, it has to be reclassified and remeasure at lower of what? It has to be reclassified and remeasure at lower of carrying amount before the asset was classified as held for sale, adjusted for depreciation, amortization, revaluation that would have been recognized had the asset not been classified as held for sale. Means what? You need to
We have to work for the existing standard, not as per Ind AS 105.
you have to compute the carrying amount. What would have been the carrying amount had this asset never been classified as held for sale? Means अगर ये एसेट कभी हेल्ड फॉर सेल नहीं रहा होता, देन एज पर इंड AS 16 कैरिंग वैल्यू क्या होती? करेक्ट. Had this asset never been classified as held for sale, what would have been the carrying amount? What would have been the carrying amount? Okay. Second, recoverable amount at the date of change of plan. Recoverable amount, right? So what is a recoverable amount? The definition is given under Ind AS 36. Recoverable amount is higher of fair value less cost to sell and value in use. So first, recoverable amount. So recoverable amount will be given to in your question. How it can be given into your question? Either the value in use and fair value less cost to sell both are given, right? So the higher you can take as a recoverable value, or recoverable value will be directly given in the question, right? And carrying amount, of course, every time you need to compute that what should be my computed carrying value had this asset never been classified as held for sale. Okay, right? So quickly we'll do one question on this and then we'll move to that word file question. Friends, a property is purchased for rupees 5 lakh on 1st January 2019. Useful life is 20 years, zero residual value. Property is measured subsequently at depreciated historical cost. Okay. On 31st December 20, it is decided that the property is to be classified as held for sale. Classification criteria are met. On 31st December 20 means after how many years? After how many years?
2 years.
After 2 years, yes. From 1st January 2019 to 31st December 2020, after 2 years. This property was on a cost model, right? And residual value is zero. So what is the per annum depreciation if the life is 20 years?
It's 25,000.
25,000 is the value of the depreciation. Okay. So in 2 years, what is the accumulated depreciation?
50,000.
50,000. 25,000 multiplied by 2, 50,000. Then an impairment assessment on 31st December 2020 determined the recoverable value based on value in use to be 4 lakh rupee. Means, so 5 lakh minus 50,000 comes at 450. and there is a recoverable value which is given on 31st December 20 is 4 lakh. What does it mean?
Yeah, it's actually impaired, impairment.
50,000 is the impairment loss. 5 lakh minus 50 minus 50, 4 lakh. So here this is from Ind AS 16 to Ind AS 105, right?
Yes, sir.
So a non-current asset which is PPE becomes a non-current asset held for sale. Fair value less cost to sell is also given. Fair value less cost to sell on 31st December 2020 is 390. Is 3,90,000. Okay. So the fair value less cost to sell on 31st December 2020 is 3,90,000. Okay. Friends, in this case, now your carrying value as per the respective standard which is Ind AS 16 is 4 lakh. The fair value less cost to sell is 390. The fair value less cost to sell is 390. So what is your value of non-current asset held for sale? What is
390.
lower?
390.
4 lakh is lower or 390 is lower? 390 is lower. So your non-current asset held for sale on 31st December 20 will be measured at 390, and where the 10,000 rupees of impairment loss will go?
Again, impairment loss.
Again impairment loss. So what is the total impairment loss on this asset?
50,000 plus 10,000, 60,000.
50,000 H per Ind AS 16 and 10,000 H per Ind AS 105. Total 60,000. Very good. Now, in the next paragraph. So this part was what? This part was a journey of non-current asset to non-current asset held for sale. This was the journey of Ind AS 16 to Ind AS 105. ये जर्नी कहां से कहां तक की थी? 116 to 105, right? Yes. As on 31st December 2021, there is a change in plan and the property no longer meet the criteria to be classified as held for sale, right? So as on 31st December 2021, there is a change in plan and the property no longer meet the criteria to be classified as held for sale. Okay. So now there is a change in plan. Means again it is moving from Ind AS 105 to Ind AS 16.
16.
Ind AS 16. So there is a change in the plan. Okay. And what it is saying, after 1 year, right? So on 31st December 20, purchase date was 1st January 19. After 2 years, it become held for sale, and after 1 year, it becomes again a PPE. There is a change in plan and the property no longer meet the criteria to be classified as held for sale. There is no change in the useful life of the property at any point of time. Means the initial life was 20 years. So accordingly, the life was decreasing. Okay. The recoverable value on the date of change of plan is given, which is 3,85,000. The recoverable value is given on the date of change of plan. Recoverable value is given on the date of change of plan. So my dear friends, the recoverable value is given. So what we are required to compute?
We have to compute the carrying value of as per the asset which is not held for sale.
Yes, you are required to compute the carrying value at 31st December 2021 as per Ind AS 16, assuming this asset was not classified as held for sale on 31st December 20. Right? So from 1st January 19 to 31st December 20, things were very clear. It was Ind AS 16. Correct? But on 31st December 20, it became Ind AS 105. So forget about Ind AS 105. Assuming this Ind AS 105 was never there. So what should be my carrying amount as on 31st December 2021? Right? So compute carrying amount on 31st December 2021, assuming this asset was never classified as held for sale. So friends, what is the carrying amount on 31st December 2021? What is the carrying amount? Tell me.
Yes, sir. The first 5 lakh is the opening balance cost. Then from January 1st, 2019 to 31st December 2020, 2 years we need to provide depreciation, that is 50,000. After 50,000, then we will get 4,50,000.
Hmm.
Now there the impairment is happened. Now that time the recoverable value is 4 lakh only. the impairment. That impairment loss will go. Then the carrying value at that point in time is 4 lakh only on 31st December 2020. From where the 18 years remaining. So 4 lakh divided by 18, then per year depreciation will come to 22,222. So from 4 lakhs, if you minus is 3 lakh 77,777 or 8, we can keep it as.
You are absolutely right. Yes. So where the student made a mistake, what they do, they pick 5 lakh rupee and they just charge depreciation 25,000 rupees every year, and they compute 4 lakh 25,000 carrying value as per Ind AS 16 on 31st December 2021, which is absolutely wrong. Just tell me one thing, and you are absolutely right, Saminathan. So friends, if this asset was not classified as held for sale, then of course this 10,000 would not have been there, this 390 would not have been there, but this impairment charge of 50,000 still it has to be there. Yes or no? Yes,
Yes, sir, it will remain
it
actually.
will
It's a
remain
cost model.
because
Cost model.
yes, it will remain. It will remain even if you see the formula of the carrying amount, either in cost model or revaluation model. In both the model, the formula is cost minus accumulated depreciation minus accumulated impairment losses. For revaluation model, the formula is revalued amount minus subsequent accumulated depreciation and subsequent impairment losses. So to cut a long story short, this impairment is not only a subject of Ind AS 105, this impairment is also a subject of Ind AS 16 as well, right? Ind AS 38 as well. So the point is, forget about Ind AS 105. When this asset was not classified as held for sale even on 31st December 2020, still you were doing the accounting as per Ind AS 16. You were taking the cognizance of this impairment charge on 50 impairment charge, right? You were taking the cognizance of this impairment charge under Ind AS 16. Means the carrying amount as on 31st December 20 as per Ind AS 16 is 4 lakh rupee, right? So now, what is my next year depreciation? My next year depreciation is my opening value divided by remaining life. So my opening value is 4 lakh. What is my remaining life? My remaining life is 18 years. So if I'll divide 4 lakh divided by 18 years, it will give me double two, triple two. This concept I taught in India 16 also. So what is my carrying amount on 31st December 2021? Assuming, 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 right? Assuming if this asset was never classified as held for sale, 377,778. What is the recoverable amount? 385. What is lower? Lower is 377,778. So this will become the value of the PPE. What is the accounting entry? Property, plant and equipment building account debit 377,778. 2. Non-current asset held for sale credit 3,90,000. 12,222 will go as a impairment loss on reclassification, right? So this was the concept of plan change in plan of sale, my dear friends. It's 8:30 now. Let's have a break for 10 minutes and we will start at 8:41. Sounds good? Okay.
Yes, sir. Thank you.
Yeah. So let's discuss a question. Just a minute. Yes. So quickly discuss a question on, yeah, question number 5, right? Again on disposal group. And then we'll move to the another question. Question number 5. Disposal group. Carrying amount at the reporting date before classification is held for sale, right? Goodwill, PP, which is carried at revalued amounts, building carried at cost, inventory, investment in equity instrument. 16,000 is the value for these group of assets. Carrying amount is remeasured immediately before classification is held for sale. This is what, Saminathan, this is step number 1. Carrying amount on the date of held for sale or carrying amount immediately before classification is held for sale, right? This is the value. So from 16,000, it become 14,900. It is a normal change, right? So 14,900. Since 1,100 change is a normal change, correct? Like your PP is going to be depreciated, your intangible asset are going to be amortized. Okay. Yeah. So the entity estimated that fair value less cost to sell of the disposal group amounts to 13,000. So now from 14,900 is what? It is step number 1. And what is my step number 2? Fair value less cost to sell 13,000. So what is the impairment as per Ind AS 105? From 14,900 it become 13,000, right? It means 1,900 is the impairment. 1,900 is the impairment, correct? 1,900, okay. Determine the loss on measurement of carrying amount of assets immediately before and after the classification is held for sale. Immediately before the classification is held for sale, what was the loss? From 16 it become 14,19, 14,900 means 1,100 loss. And after classification is held for sale, 1,900 loss, right? Okay. Further, so also determine the treatment or allocation of such loss to the assets of the companies. Now you are required to show how this loss, which is before classification is held for sale and after classification is held for sale, has to be allocated, okay. Further, in case at the end of the reporting period, the fair value less cost to sell is increased and estimated at 15,500, then what amount of reversal will be allowed and on what all assets, right? This question is also asking that once you classify it as held for sale at 13,000, now on the reporting date, if the fair value less cost to sell become 15,500, then what amount of the reversal will be allowed and on what all assets, right? This is the question which is given by the question, right? Yes. How to solve this question now? Let me take you here only. So this goodwill is 1,500 and 1,500. This PP is 4,600. It becomes 4,000. Means 600 is a depreciation or it could be impairment also. But technically this value is going down due to depreciation or might be some other change. Building is 5,700 to 5,700. Inventory from 2,400 it become 2,200. Probably the value of the inventory has gone down. Probably the inventory has sold out also, right? And this investment in equity instrument from 1,800 it become 1,500. It become 1,500. Okay. So the value has also gone down. So these are the normal change as per the respective standard, right? As per the respective standard. These are the normal change. So if you see, the entity should recognize the loss of 1,100, which is 16,000 minus 14,900 in accordance with the applicable Ind AS immediately before classifying it as held for sale. The difference of 1100 reflect routine accounting entries such as revaluation. The amount shall not be considered as an impairment loss, right? So from 16,000 to 14,900, it is a normal change. It is change as per the respective standard. You need to look at, is it due to depreciation, amortization, fair valuation, revaluation, or could be impairment as well. Don't know, right? But once it is classified as held for sale, and now your carrying amount of the disposal group become 14,900, and now your fair value less cost to sell become 13,000. So 1,900 is your impairment loss as per Ind AS 105. So the entity estimates that fair value less cost to sell of the disposal group is 13,000. Since the entity has classified a disposal group as held for sale, it should measure it at the lower of its carrying amount 14,900 and fair value less cost to sell of 13,000, right? Which comes to 13,000. The entity should recognize an impairment loss of 1,900, 14,900 minus 13,000 when the disposal group is initially classified as held for sale. When the disposal group is initially classified as held for sale. So the entity should recognize an impairment loss of 1,900, okay, when the disposal group is classified as held for sale. The inventory and investment is remeasured as per Ind AS 2 and Ind AS 109 at not more than fair value at the date of remeasurement, which is immediately before classified as held for sale. So impairment loss of 1,900 is allocated to which asset? So if I talk about impairment loss of 1,900, which is 14,900 versus 13,000, investment in equity instrument, whether we will allocate the loss to investment in equity instrument, it is already at fair value,
Yes, sir. No.
right? Inventory, what about inventory?
Ind AS 2.
So Ind AS 2 and it is already at fair value, remember?
Yes,
So
yes, sir.
basically, I always tell you that when you read any concept in Ind AS, try to relate that concept with the other Ind AS also. And how can it work? Let me tell you. So let's say the allocation of impairment loss to the disposal group. You know, the allocation of impairment loss to the disposal group does not comes from Ind AS 105. It is coming from Ind AS 36, impairment of assets. From where? From Ind AS 36, from where? Allocation of impairment loss to cash generating unit, right?
Yes, sir.
And what it says? It says that whenever there is an impairment loss on a group of asset, on a cash generating unit, on a disposal group, whenever there is an impairment loss, and if the group has a goodwill, first of all, allocate the impairment loss to the extent of goodwill, right? So you have to zero your goodwill. Even after that, if there is an impairment loss, you have to allocate the impairment loss pro rata on the basis of carrying value of the other assets. Provided. What is provided? What is proviso? What is provided? Provided if any asset which is already at fair value, you cannot allocate further impairment loss on that asset. For example, financial instrument. It is already at fair value. Market value पे ही है वो. So if a financial instrument is a part of a disposal group, you cannot allocate further impairment loss on that financial instrument. Why? It is already at fair value. So to cut a long story short, if a asset in that cash generating unit or a disposal group is already at fair value, you cannot overcharge, over allocate that impairment loss. Okay, you cannot over allocate that impairment loss. Is that clear?
Yes, sir. Clear, sir.
Yeah. So in this case, if you go to the inventory standard in AS 2, at what value inventory is going to be measured at the reporting date?
NRV or cost whichever is lower.
Cost or NRV, whichever is lower, means inventory is already at lower. If the cost of the inventory is 100 and the market value is 120, it is already sitting at 100, right? It is already sitting at 100. And if the cost is 100 and NRV is 70, it is already sitting at 70. Means the inventory is at a highly conservative value. Inventory is at a highly conservative value, right? So goodwill, of course, you will allocate the impairment loss. PP, you will allocate the impairment loss. Building, you will allocate the impairment loss. Correct? So this is what you will do. And now going back to the question further, answer further. So impairment loss of 1900 is allocated to the remaining asset, right? Which asset? So what was the impairment loss? From 14,900 it become 13,000, 1900 impairment loss. Goodwill is 1500, it has to be charged off. And property, plant and equipment and building. So this impairment loss has to be allocated in the ratio of 4,000 is to 5,700, right? In which ratio? In the ratio of this 4,000 and 5,700, in this ratio, okay, right? So you have to charge your impairment loss in the ratio of 4,000 to 5,700, which is PP and building, right? So this is the value of your assets. Firstly, the impairment loss reduces the amount of goodwill in the disposal group. Then the remaining impairment loss is recognized to other asset pro rata based on the carrying value of the assets. At the end of the reporting period, the fair value less cost to sell is increased and estimated at 15,500. The maximum impairment loss reversal allowed will be 1900, being impairment loss recognized earlier. Reversal of impairment loss on goodwill is also not allowed under Ind AS 36. Okay, right? So how much you will reverse? You will reverse only to the extent of 165 and 235. Correct?
Yes, sir. The goodwill we will not touch
The
because it's
goodwill, the goodwill cannot be reversed. And you know where it is written. If you read Ind AS 36 and
yes,
Ind
sir.
AS 38, so reversal of goodwill is like a recognition of internally generated goodwill, which is prohibited. Okay. So Ind AS 38 prohibits you the recognition of internally generated goodwill. Clear?
Yes, sir.
Is that clear? Okay. Very good. Very yes. So friends, this was on in question number 5. Let's move to question number 6. Okay. What is question number 6? A freehold property was originally acquired for 40 lakh rupees. Freehold property. Ind AS 16. Some years later, after cumulative depreciation of 11 lakh has been recognized, an impairment loss of 350 is recognized, taking the carrying amount of 25 lakh 50,000, okay, which represents the estimated value in use of the property. So the cost was 40 lakh. The accumulated depreciation was 11 lakh. The impairment loss is 350. What is the carrying value of this property? 25 lakh 50,000. Okay. Cost minus accumulated depreciation minus accumulated impairment losses. Shortly thereafter, as a consequence of a proposed move to a new premises, the freehold property is classified as held for sale. Shortly thereafter, as a consequence of a proposed move to new premise, the freehold property is classified as held for sale. And at the time of classification as held for sale, carrying amount is 25 lakh 50,000. Fair value less cost to sell is assessed at 25 lakh. So, what is my carrying amount? 2550. What is my fair value less cost to sell? 25 lakh. So on the date of classification is held for sale, at what value this NCA HFS will recognize?
25 lakhs, whichever is
25
the
lakh. And where this 50,000 will go?
impairment loss.
Impairment loss. So what is the total impairment loss, cumulative impairment loss on this property?
It's a 4 lakhs because existing is on the impairment loss 3 lakh 50,000. On conversion is 50,000. Totally 4 lakhs.
Total 4 lakh. 350 is on Ind AS 16. 50,000 is on Ind AS 105. Okay. At the next reporting date, the property market has improved and the fair value less cost to sell is reassessed at 26 lakh 50,000. So what you will do for this non-current asset held for sale on the reporting date, at what value it is going to be remeasured? Yes.
Yes, sir. We have to remeasure at the fair value less cost to sell.
Yes, we have to remeasure it at fair value less cost to sell. And the fair value less cost to sell is how much? 2650. What is the value of NCHFS? 25.
20,
25.
25,
So how much is the increase? 150. 150.
150.
Should we recognize the increase?
Yes, we have already the loss is there, 4 lakh.
So yes, we should recognize the increase, but only to the extent of past cumulative impairment losses.
Loss.
So how much is the past cumulative impairment losses?
4 lakhs.
4 lakh. 20 to 3.5 plus 0.5, 4 lakh. And what is the increase here? 1.5. So we have to revise the value of NCHFS and we have to recognize the increase. Okay. What is the accounting entry? Accounting entry is non-current asset held for sale account debit 1.5 lakh to impairment loss reversal. Right?
Yes, sir.
1.5 lakh, it will go to P&L. Yes. 6 months after that, the property market has continued to improve and fair value as cost to sell is assessed at 30 lakh. Again, one more reporting date came. One more. Reporting date is not only annual.
Mhm.
Reporting date it could be quarterly also for listed companies, right? They're closing their books of accounts, they're closing their results, they're publishing their results on a quarterly basis. 6 months after that, the property market has continued to improve and fair value as cost to sell is assessed at 30 lakh. Right? So friends, what is the increase now? From 2650 it become 30. How much is the increase?
3 lakh 50,000.
350. Should we recognize the increase here or not?
Not fully, to the extent of 2 lakh 50,000.
Determine the amount of gain or loss at a different point of time and its treatment. Yes, you are absolutely right. We will recognize the increase, but only to the extent of unadjusted cumulative impairment losses. So what is unadjusted cumulative impairment losses? 2.5 lakh. So we have to recognize the increase only to the extent of 2.5 lakh. Correct? Is that clear?
Yes, sir.
Is that
Clear,
clear?
sir.
Okay. So then कुछ और भी लिखा है, कुछ और नहीं लिखा है. Yes. So this is what we discussed. Let's quickly read the answer also. The initial write down on classification is held for sale is 50,000 and the property is carried at 25 lakh. Initial measurement of NCHFS. Following classification is held for sale, no further depreciation is recognized. We are aware. Okay. At the next reporting date, the property market has improved and fair value less cost to sell is reassessed at 26.5. The gain of 1.5 is less than the cumulative impairment losses recognized to date, which is 4 lakh. Accordingly, it is credited in profit and loss and the property is carried at 26.5. 6 months after that, the property market has continued to improve and fair value less cost to sell is now assessed at 30 lakh. The further gain of 3.5 lakh is, however, in excess of the cumulative impairment loss recognized to date. And what is that? 3.5 plus 0.5 minus 1.5, which is only 2.5. Accordingly, a restricted gain of 2.5 is credited in P&L and the property is carried at 29 lakh. Subsequently, if the property is sold for 30 lakh rupee, of course, you will recognize a gain of 1 lakh rupee, right? वो तो जितने में भी बिकेगी, the actual value, the gain has to be recognized to the extent of actual value, right? Is that clear?
Yes, sir. Clear, sir.
Okay. So we discussed question number 6, question number 5, question number, then we also discussed question number 1. Okay. So let's discuss, and we also discussed question number 3, right? So we
Yes, sir.
cover, if I go by the sequence, we covered question number 1. Okay.
Yes.
We covered question number 1, then we covered question number 3, right? The three situation whether it is held for sale or not.
Yes,
Okay.
sir. We discussed.
Yeah. Question number three we discussed. Then we discussed total six questions are there in this word file. Then we discussed question number five of disposal group. Okay. And we discussed question number five and question number six also, and two questions from that PowerPoint presentation also, right?
Yes, sir.
On revision, question number six also. Yes. Now, let's go to the PowerPoint presentation and let's discuss one question on discontinued operations. Okay. So that will revise that part also. Yes, this is from ICAI Board of Studies material. Identify whether each of the following scenarios give rise to a discontinued operations and classified as asset held for sale or classified as asset held for sale. You need to tell me whether these scenarios are discontinued operation or these scenarios are asset held for sale or both. MNO disposes of a component of the entity by selling the underlying assets. The sale transaction is incomplete at the reporting date. Whether it is a discontinued operation, whether it is a asset held for sale. Tell me what is it? Since MNO disposes of a component, disposal of a component of an entity.
Component is not a discontinued operation.
Component is a discounted operation, Saminathan, right? If you see the definition, if you see the definition of discounted operation, what it says, a component of an entity comprises operation in cash flows that can be clearly distinguished operationally and for financial reporting purposes from rest of the entity. A discontinued operation is a component of an entity that has been disposed of or is classified as held for sale. It's a component, segment, right? So MNO disposes of a component of the entity by selling the underlying asset. So there was a segment, there was a component. This company is disposing this segment or component by selling the underlying asset, and the sale transaction is incomplete at the reporting date. Right? Means the asset has actually not been sold out. So is it a discontinued operation? Answer is yes. Is it an asset held for sale also?
Yes, sir.
Yes, it is a
Both, yes.
disposal group. Both. It is a disposal group held for sale also. Remember, I have given one example of the sale of the coaching institute.
Yes, sir.
Yes. For example, you are operating in India, and what you do, you are selling your business in India. So basically, you are shutting down your business in India. You have only one factory, and you are shutting down that factory. And you have another factory in let's say in Singapore. So first of all, if you want to shut down your business, is it a discontinued operation? Yes.
Yes, sir. Discontinued operation.
डिसकंटिन्यू का मतलब क्या होता है? डिसकंटिन्यू मतलब not continue. So it is discontinue operation. But is it necessary that you have to sell out all those group of assets? You can
No.
donate also. You
Yes,
can
sir.
you can use those assets in your other facility also.
Yes.
Yes. And what is the condition for disposal group? For disposal group, of course, the asset has to be sold out. For disposal group, it has to be available for immediate sale in present condition, and the sale must be highly probable, right? That was the condition. So a discontinued operation could be also a disposal group held for sale, could not be a disposal group held for sale, right?
Yes, sir.
हो सकता है ना?
Yes, sir.
Yeah. So a discontinued operation not necessarily always be a held for sale. It cannot be. So if there is a discontinued operation, there could be a situation where this discontinued operation is also a disposal group held for sale. It also cannot be a disposal group held for sale as well, right? And all disposal group held for sale not necessarily becomes a discontinued operations, right? I have two factories. in one of the location. I disposed of one of the factory. Whether whether I have discontinued my operation.
No, because you have
My
another
Yeah,
factory is there.
another factory is going on. So let's say if I am manufacturing a product, it is getting produced in another factory. Might be I've shut down my factory just because of optimizing my resources, optimizing my efficiency, improve my efficiency, right? I'm not able to handle two factory. I sold out one factory and now I am putting my entire focus on another factory, and so that my efficiency and productivity will go up. Both the factories were lying at less than the average capacity. So now if I will have one factory, I will run this factory at more than the average capacity, more than the normal capacity, right? So neither it is a discontinuation of geographical operation, neither it is a discontinuation of major line of business, major product of business. But yes, if you are disposing of one of the factory, it is a disposal group held for sale, but it is not a discontinued operations, right? So when you think about a discontinued operation, you have to look at whether it is a disposal group or not. If it is a disposal group, the accounting has to happen as per the disposal group. And if it becomes a discontinued operation also, then additional presentation and disclosure requirement has to be followed. Right? Question number two. Question number two. So we discussed it is yes and yes. We discussed. PQR has ceased activities that meet the definition of a discontinued operations without selling any assets. Without selling any assets. PQR has ceased activities that meet the definition of a discontinued operations. Okay. But it has not sold any asset, whether it is a discontinued operation or not.
Yes, sir. It is a
It is
discontinued operation.
it is written. It
It
is
is
written
written
it meets the
clearly.
definition of discontinued operation. But is it an asset held for sale?
No.
No, it is not held for sale. Without selling any assets. It is not an asset held for sale. STU ceases activity and has already completed the sale of underlying asset at the reporting date. STU ceases activities and has already completed the sale of the underlying asset at the reporting date.
Yes, sir.
Whether
It
it
is
is
a,
a discounted operation?
yes, sir. Hundred
Yes,
percentage.
it is ceases activity. It ceases activity.
And
Whether it
sales
is an
are
asset held for sale?
no, sir. Already the asset also sold. Then there is no meaning for health for
Yes.
sale.
So the asset has actually been sold out, already sold out. It is not an asset held for sale or disposal group held for sale. The asset has already been sold out. Okay. Right? Yes. Last question. VWX. VWX will. VWX will sell. Will sell. Or has sold assets that are within the scope of Ind AS 105 but does not discontinue any of its operation. VWX will sell or has already sold out the assets that are within the scope of Ind AS 105 but does not discontinue of its operation.
Yeah, it's clearly mentioned not discontinue any operation. Then this discontinue operation, its answer is no only.
And what about, so discontinue operation? No. Okay.
No.
Clear. What about held for sale?
Yes, because will sell is word is there.
Yes.
So we have to say yes
You
only.
are absolutely right. Yes. Yes.
Initially, actually, on the first question, I I could not recollect exactly that meaning. Now I understood on the first question, so I can able to crack it easily. Thank you, sir.
Yeah. Great. So we understood this part. Okay. And let's discuss this question of Sun Limited also. Sun Limited is a retailer of a takeaway food like burger and pizzas. It decides to sell one of its outlet located in Chandni Chowk in New Delhi. Chandni Chowk is an area in New Delhi near Lal Killa. Okay. The company will continue to run 200 other outlets in New Delhi. So in New Delhi, there are 200 outlets, and the company has shut down one outlet, and the company will continue to run 200 other outlets. Okay. All Ind AS 105 criteria for held for sale classification were first met at 1st October 2016. The outlet will be sold in June 2017. The held for sale classification were first met at 1st October 2016. Outlet will be sold in June 2017. Okay. Management believe that outlet is a discontinued operation and wants to present the result of outlet as a discontinued operations. Okay. Tell me whether management is right. Whether this sale of one outlet, of course, it's a disposal group, but whether it is a discontinued operation also?
No, sir. It's not discontinued operation as such because in that location they have another 200 outlets store there. So it will be a continuing operation.
Okay. The Chandni Chowk outlet is a disposal group. It is not a discounted operation as it is only one outlet. It is not a major line of business or geographical area, nor a subsidiary acquired with a view to resale, right? It's a disposal group. It is not a discounted operation because it is only one outlet. Okay, right? Yeah. Let's go to other question from the word file and let's go to question number 4. Question number 4. So today, so far we have covered 7 questions. And we have also revised all the concepts, right?
Yes, sir.
Question number 4. X Limited acquires B Limited exclusively with a view to sale and it meet the criteria to be classified as discontinued operation as per Ind AS 105. X Limited acquires B Limited, right? Exclusively with a view to resale. Means this company is acquiring another company, and why this company is acquiring another company? For the purpose
To
of resale.
investment property, Ind AS 40.
Not necessarily Ind AS 40. So basically, Ind AS 40, if it is for the purpose of resale, it is never an investment property, right? Investment property is held for either capital appreciation or held for rental purposes. And when I say capital appreciation, it is long term in nature, right? It is not short term in nature. And here, so when you are acquiring something for the purpose of resale, right? And when it has to come under Ind AS 105, it will always, it should always be a short term within 3 months. Okay.
Okay, okay, sir, got it.
So X Limited acquire B Limited, and this is investment property can only be a land and building investment. So acquiring a company cannot be an investment property, Saminathan.
Yes, sir. Land or building or both. Only those items is a investment property as per Ind AS 40. Right, right. I
Yes,
remember that.
two asset, two purposes: land building and capital appreciation rental. X Limited acquire B Limited with a view to resale, and it meet the criteria to be classified as discounted operation as per 105. Further, following information is available about B Limited. So this company acquires B Limited, and what is the information which is available? Fair value of total assets excluding liabilities on acquisition 360. What is the fair value of the asset at which this company was acquired?
360. 360 rupees or 5 lakhs? 360. Okay. 360.
So Manish ji, am I audible? Samanathan, am I audible?
Yes,
Yes,
sir. Very
sir.
much audible, sir. And your word file also is visible, sir.
I'm not able to hear anyone.
Sir,
Sir, you are audible.
sir, I am speaking to you, sir.
I think there is some issue with sir. Yes, 1 second. I'm calling.
Be limited. Fair value of the total assets excluding liabilities on acquisition. So fair value of the total assets are given, which is 360. Okay. Cost to sell. Cost to sell on acquisition and on reporting date is also given, which is 10. Right. And so this is on acquisition. Okay. So fair value less cost to fair value is given on acquisition 360. Cost to sell on acquisition is 10 and cost to sell on reporting date is also 10. Okay. Fair value of liabilities on acquisition date is 80. If the fair value of the total asset is 360, fair value of the liability is 80. So what is the fair value of the net assets?
280,
280, right? And what is the fair value less cost to sell?
270.
270, right? Or you can also say 360 minus 10 minus 80, 270, right?
Yes, sir. Yes, sir. Yes, sir.
So fair value of assets on acquisition date is given. Cost to sell on acquisition date is given. Fair value of liabilities on acquisition date is given and on reporting date. Both are given. And there is no change in the fair value of liability either on the acquisition date or on the reporting date. Fair value of total assets excluding liabilities on the reporting date is given, which is 340, which is 340. So how discontinued operations pertaining to B Limited should be measured in consolidated financial statement of X Limited on the acquisition date and on the reporting date. So the question is, the ask of the question is how this transaction has to be measured. How this transaction is going to be measured on the acquisition date and on the reporting date. How this transaction is going to be measured on the acquisition date and on the reporting date, right? In consolidated financial statement. Friends, first of all, let me tell you, if a subsidiary which is acquired exclusively with a view to resale, right? So the net assets has to be measured at fair value less cost to sell, correct? Okay. So in this case, Ind AS, so let me read the some paragraph of the answer and then I'll move further. In this case, Ind AS 105 define a disposal group as a group of assets to be disposed of by sale or otherwise together or as a single transaction and liabilities directly associated with those assets that will transferred in the transaction. This group includes goodwill acquired in a business combination if a group is a cash generating unit to which goodwill has been allocated in accordance with the requirement of paragraph this and this, or if it is an operation within such a cash generating unit. So the definition of disposal group is given. In the given case, B Limited is acquired exclusively with a view to resale and meet the criteria to be classified as discontinued operations. The discontinued operation would be measured in accordance with some paragraph of Ind AS 105. And what is the measurement paragraph? How a discontinued operation has to be measured. If it is a disposal group, how it is going to be measured? The measurement is given for the disposal group, right? Or the individual asset held for sale. How it is going to be measured?
So carrying value or fair value less cost to sell, whichever is lower.
Carrying value or fair value less cost to sell, right? Lower of carrying value or fair value less cost to sell. This is what paragraph 15 says. So as per paragraph 15, an entity shall measure a non-current asset or disposal group classified as held for sale, okay, at lower of its carrying amount and fair value less cost to sale. And para 16 says that if a newly acquired asset or disposal group meet the criteria to be classified as held for sale, applying paragraph 15 will result in the asset being measured on initial recognition at lower of carrying amount had it been not so classified and fair value less cost to sell. Hence, if the asset is acquired as part of business combination, it shall be measured at fair value less cost to sell. Friends, nothing. To cut a long story short, it has to be measured at cost or fair value less cost to sell, whichever is lower, right? Whatever paragraph you're looking at, right? You're not required to write these paragraphs completely in your examination answer sheet. You are not required to quote the paragraph numbers, okay? So whatever question is asking, you have to go straight by that. Like you have to say, since one of the condition of the discontinued operation is also a subsidiary acquired with a view to resale, right? It is a discontinued operation. And if it is a subsidiary which is acquired with a view to resale, so it has to be measured at carrying amount or cost versus fair value less cost to sell. Whatever is lower, that has to be measured at initially. And subsequently on the reporting date, it has to be remeasured at fair value less cost to sell. This is what you should say. Okay. Now, therefore, on acquisition date, right, B Limited, X Limited will measure investment in B Limited as a disposal group at fair value less cost to sell, which will be calculated as fair value of total assets excluding liabilities on acquisition, which is 360 minus 10. And what is that? 350, right? So your fair value of assets are 360, cost to sell is 10. What is your fair value less cost to sell of the assets? 350.
350.
And the liabilities are separate, and liabilities are also required to be presented separately. Liabilities are also required to be presented separately on the face of balance sheet. Okay. Liabilities associated with the disposal group held for sale. Now, what happened on the reporting date? The company has to remeasure on the basis of fair value less cost to sell. So, what is the value of the asset on the reporting date? Fair 60, it become 340. Is that clear? Question में दिया है.
Yes,
Yes or
sir.
no?
Yes, sir.
So it was 360 on the acquisition date. 10 rupee is the cost to sell. 350 is the fair value less cost to sell on the acquisition date. On the reporting date, fair value less cost to sell is 340. 10 rupee is the cost to sell. It become 330, right? Or alternatively, if you compute the fair value of the net assets, right, less cost to sell, it will come out 270. It will come out 270 here on the acquisition date, and it will come out 250 on the reporting date. So what is the decline? Decline is 20. Decline is 20, right? And if you compare 350 versus 330, what is the decline? 20. Decline is again 20, right? So
Yes, sir.
at the reporting date, X Limited shall present these assets and liabilities separately from other assets and liabilities in the consolidated financial statement. In the statement of P&L, X Limited shall recognize a loss on subsequent measurement of net assets at fair value of B Limited, which is equal to 20, which is 270 minus 250. 270 minus 250. This is one of the, I would say, very simple question, but I can tell you, if these kind of question came in exam, 50% of the students make an error. 50% of the student, right? Why? Because they are not able to understand the question. Fair value of the total assets, cost to sell, right? Fair value of the liabilities, then fair value of the total assets on the reporting date, cost to sell on the reporting date, right? So all these things are there. Okay. Is that clear, my dear friends?
Yes,
Whether
sir.
this
Sir,
question is clear or clear?
sir, I have one question. On the reporting date, on the presentation in the financial, the balance sheet, that asset will be shown separately, liability will be shown separately, or can we show on the
Yes.
net basis? Not allowed, sir.
No, net basis is not allowed. The
Okay.
presentation has to be like that. Let me show you the presentation, Saminathan.
Okay, sir.
So the presentation has to be like this only. Uh, just a minute. Yeah. This is the presentation, Saminathan. So if you see, non-current asset or disposal group classified as held for sale on the asset side under current assets as a separate line item. Under the liability side under current liability, liability directly associated with non-current asset classified as held for sale under current liability.
Yeah, thank you, sir. I could remember this slide as well. I temporarily. Okay.
Yeah.
Right, sir. Thank you so much.
Yes. Any question, Manish? Do you have any question on Ind AS 105? Manish, do you have any question on Ind AS 105? Okay, Manish is saying no.
No.
Yeah. So friends, this Ind AS 105, I must say it's a very short and sweet standard, right? And if I again recap this entire Ind AS 105, right from the beginning, if I quickly recap this Ind AS 105, we have done with so many questions, okay? So, and this Ind AS 105, this talks about two aspects. It talks about accounting for asset held for sale, and it talks about presentation and disclosure of discounted operation. When I say accounting, what do you mean by accounting? What are the four pillars of accounting?
RMPD, sir.
Recognition, measurement, presentation, disclosure. So this standard talks about recognition, measurement, presentation, disclosure of a non-current asset held for sale and disposal group held for sale. And as far as discounted operation is concerned, this standard only talks about presentation and disclosure. Why? Because a discontinued operation not necessarily be a disposal group also. If a discontinued operation is a disposal group, accounting has to happen as per disposal group. And since that disposal group is also a discontinued operation, so the additional presentation and disclosure requirement will follow. Okay. So we discussed that. Then we discussed that there are some assets which, if they are part of the disposal group, it is not going to be remeasured as per Ind AS 105. Okay, like deferred tax asset, employee benefit asset, financial instrument, biological asset, and insurance contract asset. Right. And friends, we also seen that this non-current asset held for sale could be an individual asset or group of asset, right? And when an individual asset or a group of asset will be classified as held for sale, when two conditions will be satisfied, the asset or disposal group must be available for immediate sale in present condition. Immediate sale in present condition. Okay. Immediate sale in present condition. And the sale must be highly probable. Okay. And friends, for having it to be held available for immediate sale in present condition, right, the intent and ability to sell must be there. And what is the criteria for sale is highly probable? Management must be committed to a plan to sell the asset. The active program to locate a buyer has been started, actively marketed for a sale at a price which is reasonably in relation to the fair value, right? Sale should be expected to complete within 1 year from the date of classification is held for sale. And the action required to complete the plan indicate it is unlikely that the sale plan will change. Friends, if the sale will not complete within 1 year of the classification is held for sale, can still it will be classified as held for sale. Is there any exception to the 1 year rule? Manish, is there any exception to the 1 year rule? Answer is yes. Even though the sale will not complete within 1 year, still, still it can be classified as held for sale. What are those two exceptions? कौन सी exception है वो? कौन सी exception है? Please read this Yes, there are two exceptions to 1 year rule, right? An extension of the period to complete sale may extend beyond 1 year due to circumstances outside the entity's control. What are the two exceptions? Exception number one, if those circumstances are outside the entity's control, for example, COVID, natural calamities, regulatory delays, right? So if the delay is due to these situations, in that case, what will happen? In that case, even it will go beyond 1 year, still you can continue to classify that asset as a held for sale. Number two, unexpected condition imposed by the buyer or the third party after the firm purchase commitment is obtained. What does it mean? So it is not due to natural calamity, not due to some other stuff. So basically, the firm purchase commitment has obtained means the binding agreement has been signed. The binding agreement has been signed. Okay. So the binding agreement has been signed. And if binding agreement, what is meant by binding agreement? So binding agreement means firm purchase a commitment. What is meant by firm purchase commitment? Means if any party walk out from the contract, breach the contract, they have to bear the severe penalties. They have to bear the severe penalties, right? If any parties were there, they have to bear the severe penalties. Friends. So, for example, already buyer has identified, the binding agreement has been entered. So the buyer came to seller and told that, that I am purchasing this factory. So you are running this factory since last 20 years. Can you do a favor for me? So the seller told, yes, please tell me. The buyer requested that, can you please get this entire factory, entire chimney or machinery clean up? Of course, whatever payment is required, I'll pay. But can you get this done? Because I want to get it done before this has to be transferred in my name, before it has been sold it out to me. So seller agreed, but seller told it will take around 1.5 years if I'll perform this exercise. Buyer said no problem. Friends, in this case, going by the substance, the buyer has already identified the non-binding agreement. The binding agreement has already been signed. It's only a matter of time. So don't you think we should continue to show this as a non-current asset held for sale? Or it is just crossing 1 year. We should say no, no, no. It is not classified as held for sale. Even the fact is there that the buyer is there, the binding agreement is there. Correct? Logical, na? Logical?
Yes, sir.
So that is why standard has given you two exceptions. Exception number one, if the delay is due to the circumstances outside the entity control, which is regulatory reason, natural calamities, COVID, etc., right? Etc. Number one. Number two, what? Unexpected condition imposed by the buyer or the third party, but the condition is the binding agreement must have been signed. The binding agreement must have been signed. In such circumstances, asset or disposal group will still be classified as held for sale. Right. So friends, we discussed this also, that what are the exception to 1 year rule. We also discussed the concept of abandoned asset. What is meant by abandoned asset? Abandoned asset are those assets which are not, which are temporarily out of use. Why? Because of the decrease in demand. When the demand will pick up, those assets are going to be used. Okay. So those are known as abandoned asset, chode hue asset. Those are not asset held for sale. Right. So friends, then we discuss the measurement, and what is the measurement criteria? The once the asset is classified as held for sale, it has to be measured at lower of what? Step number one, carrying amount on the date of held for sale, and the fair value less cost to sell, step number two. Whatever is lower, that will become the value of the non-current asset classified as held for sale or disposal group held for sale. Okay. And whatever decrease is there, for example, if the carrying amount is lower than the fair value less cost to sell, means fair value is higher, carrying amount is lower. In that case, there is no impairment because जो carrying amount है वही आपका non current asset held for sale की value बन जाएगा. But if fair value less cost to sell is lower than the carrying amount, there will be an impairment. This impairment will go to P&L. Okay. This is not considered as a revaluation. There is no concept of revaluation model in Ind AS 105. It has to go to P&L, right? On the reporting date, once it has been recognized in P&L, on the reporting date, it has to be remeasured at fair value less cost to sell. If fair value less cost to sell is the same value, no change. If fair value less cost to sell is subsequently declined, you have to record the decrease. If fair value less cost to sell has been increased, you have to record the increase to the extent of past cumulative impairment losses. Right? So we discussed what is meant by non-current asset held for sale, what are the criteria for classifying the asset or disposal group as held for sale, whether asset temporarily taken out of use is termed as abandoned or classified as held for sale, what are the measurement provision for asset which are classified as held for sale. We also did case study 1, right, Saminathan?
Yes, sir.
Disposal group, we did 2 case study on disposal group, right?
Yes,
We
sir.
discussed
Yes,
this
sir.
case study in our full class. Then we discussed the concept of changes to a plan of sale. We discussed what are the situation when there is a change to a plan of sale, right? And we discussed that whenever there is a change in plan of a sale, on the date of change, the asset has to be reclassified and remeasured at lower of computed carrying amount and recoverable amount. What is meant by computed carrying amount? Computed carrying amount means the amount, the carrying value. Had the asset never been classified as held for sale, what would have been the carrying value? Okay. And the recoverable value, right? We discussed this case study 5, which gives you the entire journey from PPE to 105 and 105 to PPE. We discussed this case study 5 as well, right? Then we discussed the concept of discontinued operations, friends, right? And what is a discontinued operation? It's a component of an entity. First of all, it's a component of an entity. And what is meant by component of an entity? A component of entity is those component where the operation and the cash flows can be clearly distinguished from the operational purpose as well as from the financial reporting purpose, right? Okay. And a discontinued operation is a component of entity which has been disposed of or is classified as held for sale, right? Which represent a separate major line of business or geographical area of operation, is part of a single coordinated plan to dispose of a separate major line of business or geographical area of operation, or is a subsidiary acquired exclusively with a view to resale, right? We discussed this. We discussed this case study number 6. We discussed this case study, which is illustration number 3 from ICAI study material also. In total, my dear friends, we have covered almost 10 questions, right? 5 from the Word file and 4 to 5 questions from the PowerPoint presentation, right? Quickly tell me, what is the answer of this multiple choice question? An entity can continue to depreciate an asset even if it is classified it as non-current asset held for sale as per Ind AS 105.
No, no, no. We should stop it immediately.
Yes. So once an asset will become a non-current asset held for sale, depreciation has to be stopped immediately. The answer is false. Asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note.
No, 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 no.
For
It should be
example,
yeah, it should be classified as non-current asset held for sale.
as a separate line item.
A
Okay.
separate line
So
item.
what
It's a
question
false.
is saying, for example, there is a PPE, there is an intangible asset. In PPE, one of the building is held for sale. In intangible asset, one of the software is held for sale. So it will not show in PPE and intangible asset. All the non-current asset held for sale or the disposal group held for sale has to be moved from non-current to current first. And under the current asset category, it has to be shown as a separate line item, non-current asset held for sale or disposal group held for sale, right? It has to be
Yes,
shown as
sir.
a separate line. Okay. So the answer is false. Under Ind AS 105, an entity is committed to distribute the asset or disposal group to the owners. That is, the asset must be Must be, which is the right option? Available for immediate distribution in the present condition, the distribution must be highly probable. Second is virtually certain. Third is reasonably certain. Fourth is virtually certain. What is the right answer?
Highly probable word is there. Yeah,
Right?
A is correct.
A is the right answer.
Yes,
Third,
sir.
A for apple. Question number 4. How, how to measure a non-current asset or disposal group that ceases to be classified as held for sale? Lower of carrying amount which would have been had the asset never been classified as held for sale and recoverable amount. Lower of carrying amount on the date asset ceases to be classified as held for sale and recoverable amount. Lower of carrying amount and fair value risk cost to sell. Lower of carrying amount and the amount which would have been had the asset not been classified as held for sale. In case of change of plan, what is the right answer?
Yeah, we have to put that carrying amount as per the existing standards. Would you have
So basically, you need to compute what would
yes,
have been the carrying amount had the asset never been classified as held for sale,
yes, on
and
this, yeah.
fair and recoverable amount. Which is the right option? Which one is the right
A,
option, guys?
Yes, sir, A.
A.
A. A is the right answer, right? A is the right answer. Yes. So, any question, Manish, Saminathan, Rahul, any question? So we have completed this index 105 like a complete class. Okay. We solved so many questions today. We discussed all the concepts even in detail, even with the help of few examples which I used to take in my normal class, normal session. Right. If you
Yeah,
have any question, I would be happy to answer. Otherwise, I will be happy to conclude the session.
sir,
Yes, Aminathan.
I feel look like a original class, not like a revisionary class. This standard.
Thank you, Saminathan. Thank you so much. Manish, do you have any question? So no question from Manish as well. Okay. So thank you so much. If you guys don't have any question, so let me conclude the class. Thank you so much, guys. Thank you.
Thank you so much, sir. Have a great day.
Thank you.
Thank you.
Thank you, Manish ji. Manish ji, class is over.